Blockchain lending company Figure Technology, which went public earlier this fall, is now unveiling what it's calling the first ever blockchain native IPO for equity issuance. The company filing with the SEC, issuing a new class of shares, settling and trading directly on the Providence blockchain, bypassing traditional clearing systems while still allowing conversion into its NASDAQ-listed stock. Joining me now is the co-founder and executive chairman of Figure, Mike Cagney, back with us. Mike, great to see you. Congratulations on this new idea and what you're doing in terms of digital assets. Very exciting.
Great to see you as well. Appreciate being on.
Walk us through how this works and how you see the biggest growth story here, because it feels like everything at this point is going on the blockchain when it comes to financial services.
Sure. So when we started Figure back in 2018, the whole point was we felt blockchain is going to transform capital markets. And we started that with lending and did the first loans on blockchain back in 2018. And since have built a relatively large ecosystem of over 250 partners where they originate loans native on chain, and they capture three benefits. They get transactional efficiency, they get liquidity, and they get DeFi from a financing standpoint. And that DeFi aspects become more and more important. We're financing more and more loans each day in the decentralized finance universe and at cheaper rates than we do in the wholesale capital markets. And we felt that those value propositions were extensible into blockchain, into equity issuance. And so when we went public in the S1, we said that we intended to issue a public security native on-chain. And as part of the IPO process, we talked to roughly 150 buy-side accounts about the value of blockchain security. And specifically, we said, look, the blockchain security, there's some transactional benefits. It can trade 24/7, but the DeFi aspect's what's most important. Your ability to use that security as collateral from a leverage standpoint, and your ability to control stock loan, which is a huge economic benefit to the buy side. Because as you know, today, when you lend out your stock, the prime broker intermediates between you and the borrower. When the stock goes on special, you're not getting the benefit of that economic. And so what we intend to do is run a limit order book for that security where I get to lend it out and say, I'll lend 100 shares of Figure at 11%, but that economic accrues back to the buy side. So universally, the accounts that we talked to said, you're right, I want to own the blockchain security, but how can I ensure there's going to be liquidity there? What if I get stuck in that security? And that's where we came up with a concept where the security holder can basically transfer that security or swap that security back and forth between the NASDAQ version and the blockchain version. And what that does is it brings the liquidity of the NASDAQ onto the blockchain day one. The market makers, whatever market they make on the NASDAQ side, they're willing to make that same market on the blockchain side because of that convertibility of the security.
Well, that's very exciting because you've actually got the liquidity there. And right there, knowing that you've got liquidity, you're going to see more volume. You're quickly becoming one of the leading non-bank lenders. Is that right? I mean, you're taking market share from the major traditional banks.
Sure. I think we're the largest non-bank HELOC lender for sure. And what we've been doing, more importantly than taking market share from the banks, we're actually trying to partner with the banks and allow them to originate these loans on blockchain and get the benefit. We're actually being more competitive right now with the GSEs. And so sub $300,000 first lien mortgage, we're dominating that vertical using the HELOC as opposed to the traditional first lien mortgage, but at a much lower cost to originate the asset. And that's one of the fastest growing areas that we have right now on the credit side.
So what are you looking at in terms of demand right now? I mean, we talk so much about affordability. People are having a hard time getting a mortgage. What can you tell us in terms of the volume that you're seeing?
Sure. So the challenge in the sub $300,000 mortgage category, it costs you about $13,000 to originate a Fannie Mae or Freddie Mac mortgage. And let's say you're doing a $200,000 mortgage, that's 6.5 points. And there isn't a 6.5 point takeout market for that mortgage. And so most mortgage originators have kind of stopped doing that loan. And in our situation, our partners, it costs them, $1,000 to do that loan. And that loan now becomes immediately accessible to them. They're turning that on. And so, our loans are all on public blockchain. So I can say this without disclosing any material non-public information. But, year over year, we're seeing significant growth and demand across the spectrum for credit.
Yeah, I mean, the home equity line of credit, how would you assess the market right now as we've seen all these fears of people being unable to afford it?
Yeah, look, we're very careful in terms of what we do on originating the asset, ensuring the borrower can afford the loan. But we're not seeing any spike in delinquencies. We're seeing consistent demand and consistent growth in demand and consistent growth in partners joining our network to leverage our infrastructure to originate those loans and get that benefit of blockchain, that transactional liquidity, and most importantly, financing benefit.
I mean, this seems like a watershed moment for blockchain, what's going on. Talk to us about decentralized finance gaining traction. You're mentioning the DeFi lending rates undercutting traditional 30-year mortgages right now, right? Even auto loans. Crypto holders increasingly borrowing against digital assets as well, using blockchain platforms to cut costs and speed up loans and again, bypass the bank middlemen as on-chain lending is growing.
Sure, and it's one of the things that's really important to us on the legislative efforts right now. The government's working on a market structure bill, and as part of that market structure bill, it's going to define what DeFi is, decentralized finance, how it's regulated. And one of the things we've been doing is making sure that folks in Washington understand how much it benefits their constituents. We lower the cost of loans up to 200 basis points because of the financing rates that we get off of decentralized finance, and that's a huge impact to the consumer.
And what about tokenization?
I think
Mike, how
that
is that
the
playing
key
out?
for
Yeah.
yeah, I think the key for tokenization is tokenizing the right assets. And for DeFi to work, you need liquidity in the underlying asset. And what we've done with HELOCs, for example, is we've created a homogeneous liquid marketplace for them. Obviously, equity is a homogeneous liquid marketplace. Crypto is as well. I think things like putting office buildings in Topeka on the blockchain aren't necessarily the best applications of the technology right now, but
Right.
leaning into those liquid homogeneous markets sure are.
Mike, we are watching this story. Hold on one moment. I want to break this GDP number at 4.3%, much better than expected. We had expectations of a GDP number coming up at 3.3%. This, of course, is the third quarter GDP, and it's been delayed 2 months because of the shutdown. The GDP that is coming out right now is at 4.3%, much better than expected. From your role, Mike, do you see a better economy? This 4.3% number is much better than analysts and economists were looking for.
Sure, and not surprising again, given the performance we've seen on credit and a healthy growth in loan demand. So we expect that number to keep going.
All right, we will leave it there. Mike, great to see you this morning. We so appreciate it. We'll be watching Figure, really a blockbuster game changer in financial services. Thank you, Mike. Mike Cagney is the co-founder of
Thanks for having me
Figure.